The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we got two really nice emails last night. One with pictures of soiled vegetables, and another one explaining where I should go. And so with that, I have decided to compose a tune for everybody here. You're going to hear my very best Elvis impersonation. So here we go. My home's in Montana, I wear a bandana, my spurs are of silver, my donkey Luigi is gray. While riding the ranges, my luck never changes, with foot in the stirrups I'll gallop away. In search of that elusive 200-day moving average, I'll find it one day and come back to you with my results. And this is why I have a full-time job. Folks, we have broken a lot of things that I looked at. Not all of them, but some of them. We've broken, of course, the S&P has gone far above the 618 and the 786. The Dow Jones, of course, shattered the 786 by 100 points. It looked like it was going to hold in the last hour, but what happened was the NASDAQ came down and took out the previous day's low by just half a penny. And once that happened, with an hour to go, it started up. And after about 20 minutes, it appeared to me that we were going to close on the highs, which in fact we did. We've not broken the New York Stock Exchange Index. We've not broken the SOX Index. We've not broken some of the others, but the IWM has picked up quite a bit. It's still, in downtrends and stuff, but the transportations, utilities are still in downtrends. Yesterday was the big Bradley date. Whether that was the thing that did it, or, it could have been the culmination of the full moon, because we were within one day of the full moon, which came in on the 27th. I don't know, but it did break all of those numbers. However, none of those big five stocks that I looked at the patterns of, none of those broke those highs of Friday. Microsoft, Google, Amazon, McDonald's. Facebook took it out by 10 cents or something like that. It was really a very small amount. So that's really the case. So we'll see what happens here. Now, yesterday I had a couple of alerts go off that I think an alert is when I see a price objective that I've had in here for a very long time. And we had this happen in the silver market. Silver hit the exact 61% retracement yesterday at 1634. The high was 1635 and a half. And it just not, didn't really do much after that. It started to go down, so we'll see. Now, someone's asking me the question if this is a breakout in IWM and the banking stocks, because they've all taken off, but most of that was done, when the market was, hold on a second, the alert's going off again, so I've got to check, so see what's going off. We've got another major alert going off right now, folks, and that is in the Treasury notes. The Treasury notes are getting right down. Let me just put this in here because this is interesting, similar to the one like we had in crude oil yesterday when it was making the 61% retracement before it turned. So let's take a quick look here at the oh dear, I've got to turn this thing off, otherwise it's going to drive me nuts. Well, we'll leave it on for just a little bit anyway. Okay, we're going to get on here and post this in here because Treasury notes are coming into really major support. We have a 61% retracement within a tick or two of where we are right now. That's a 61% retracement. That's also a Gartley pattern. And so it's got to hold that level. Might not work, but that's a situation where you've got a really good risk-reward ratio. Working the Treasury bonds are at the 786. Talking too fast here. Hold on just a second. Let me turn this note. I've got to turn this note alert off. Otherwise, it'll probably beep forever. Let's see where we are. Yes, we're there right now. We're within a pip or two of the exact number. So we'll see if it's going to hold. But that's a very low risk trade. You don't have to risk more than about 6 pips on that puppy if you decide that you like that Gartley pattern, and that's what you have to decide to do, is whether you like that one or not. But it is hitting as we're speaking right now, so we'll watch it a little bit. We're going to have Rich Anderson on at the break. He is going to give us some information about El Nino. I wanted to share with you the fact that yesterday in the if you'll notice, I'm going to put up the open interest figures for the stock indices, and as you can see, there was a 20,000 increase in open interest, and with stock indices going up, that is bullish. So we had 2 days of negative open interest, and then on Friday with the big move that has turned to the upside. So whether that is going to be the big thing or not. The main thing that I look at is the New York Stock Exchange Index. That has not broken anything of any significance that I can see. We are just a shade away from the exact 61% retracement on this. It's not got very far to go, but it's still in the same ballpark of what I've looked at on some of these things. But others have broken out to the upside, look pretty good. Now the banking index also did a really nice reversal yesterday, and it stopped exactly within a half a dollar of the exact 61% retracement of the whole down move. So whether this means anything as far as the market getting ready to turn, I don't know. But the Bradley date is a significant date, so we'll see if that's going to be the case. The transportations, of course, and the Dow Jones transportations and the Dow Jones utilities have both failed to confirm this. And whether it's still early, but for heaven's sakes, who knows what happens. Last night after I looked at what the market did, and I wasn't surprised the fact that where it closed, because the fact that the Dow came down 150 points after the Fed and then rallied 200 points, that did not surprise me. But we're still following the same scenario that I can see from this 20-year chart on the New York Stock Exchange Index. But another up day or two, and all this is baloney, and Luigi and I will be going farther out into the desert than we probably wanted to do. I am going to be taking a break here from the radio show for a while, which I'm sure that some of you will miss me and some of you won't, but that's neither here nor there. What we have to do is we've got to keep an eye on this market over the next couple of days. There's just too much bullish enthusiasm right now. I mean, it's getting to be the point where it's getting to be, they think the Federal Reserve is really, and they're running the whole thing, but we'll see how much longer that's going to last. I still think it's going to be in badly, but evidently, my hypothesis is wrong. Now, just for general knowledge, folks, I do the 24/7 Fibonacci thing for TFNN, and we've only been short one stock in this last several days. In the last 8 days, we were long. We had a really big move in the Canadian dollar off the 3 drive to a bottom pattern. Then we shorted Nike at 132, and it got down to 129 and change, and it's trading at 131.29. So even with this huge up move, Nike, which had been one of the biggest Dow stocks, has still not gone higher. Now we moving our stop down to just almost break even on this, so that you don't have any risk at all. But that's the main thing. Folks, if you're interested in trading, just take a look at the euro. That's all you have to look at. That thing is, that's the most perfect thing I've ever seen to trade in my life. I mean, it's just amazing. Yesterday it broke almost 200. Well, it did. It broke 200 pips, and see see what happens to it today. We rallied 70 pips, and when we backed off another 60 pips from there. That's $600 with a risk, that is very, very small. Yesterday, the euro was the easiest trade of all, because it had rallied up exactly 70 pips off of the last big break that we had, and then when the Fed came in, bada bing, bada boom, down she went again. So it's still in a very strong bear market in the euro. I believe we're heading. Well, the first objective is, of course, 108.50, and we're within a heartbeat of that right now. And then after that, you're looking at 105 and then par. Par's the long-term one that we're looking at. Okay, we've had a request to take a look at Apple, because that was another one that was pretty strong yesterday. It was really amazing, the fact that the NASDAQ was up as much as it was, and the big stocks of the NASDAQ, excuse me, the big stocks of the NASDAQ didn't do very much at all. Microsoft didn't do much. Amazon didn't do much. Google didn't do much. Facebook up very slightly. So I mean, they didn't. The big stocks of the NASDAQ didn't do it. It was the little ones that did it, with the help of Apple, of course, which is 15% of the NASDAQ. Now, Apple's has gone above the 61% retracement again, above that 117 level. The next resistance is at 124, which is at the 786. But it still looks like it could go higher, so you don't want to stand in front of it. So you want to keep an eye on what it's going to do here over the next few days. At the break, as I mentioned, we will have Rich Anderson on to talk about El Nino. We've had some pretty good moves in some of the grains up and down. Very quiet compared to the rest of the volatility that we're having. We need to mention the gold. We did get down to that level that we were looking at, down at the 1153 level. We hit that right after the Fed came out. About 2 hours later, the market came down. It rallied up to 1162, and it's come down and tested the 1153 one more time. All that's telling us is that we have a very, very strong support there at 1153. So if we break below 1151, 1152, that's going to tell us that we're most probably going to go lower. And with silver hitting that 61% retracement, and gold, gold was much weaker. Silver made new highs over the previous weeks, whereas we did not do that in the gold. Gold did not take out the 1192, and that's a contract that's 6 times the size of the gold. So that could be a factor to reduce the bullishness of it. But gold must hold that level that we're looking at. Okay, we're going to come back and we'll talk a little bit about oil, and then we'll have Rich Anderson on to break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted a chart of oil complex that we talked about yesterday, and the fact that, the heating oil and the gasoline had been lagging a little bit, but we were completing a 61% retracement in the oil down there at the $42.82 per barrel level. We came down there, we went a tad below it, rallied, and then tested it one more time, much like we're doing in gold here at the 1153 level. That sometimes will happen. It just shows you the importance of the number, as near as I can tell. But after it hit that level, oil is now trading $4 a barrel higher. A good 10% higher. And if we take a look at what happened with the gasoline, it's also 12%. It's actually gone higher again today. So it's gone higher, another 10% higher in the gasoline. But part of the things that we were looking at that I thought was important that we were brought out, we're watching why this was so important in oil at that time, is that on the longer term daily heating oil contract, we were making a very distinct ABCD pattern down near the 786 level. And of course, we've had a really, really strong rally in heating oil also. So that whole complex has changed. Now, that could be a reason for the oil stocks to start to increase, which would help the stock market. Stocks like Chevron and Mobil and Valero and those could be helped by the stock market also. I don't know. All I know is that oil complex has certainly found a major support down here at that level without any if it rallies that much, 10% off the bottom, that certainly qualifies as a significant bottom, I would think. Now going below that now would be extremely bearish. That's the main thing that we're keeping an eye on here. One of the questions that someone asked me on these larger patterns of these bigger stocks, why I'm looking at them so closely, and I mentioned that these patterns are some of the most powerful that we have. I think probably the best one to look at as far as a review is Microsoft, and that's the only one I can't find. Can you believe that? Where is it? It's got to be here. There's no way I would have taken that off. Well, what I'll do is I'll do Amazon. This is just as good. Well, it's not quite as good. Microsoft is absolutely the best because it has all of the patterns together. And why can't I find Microsoft? Well, that's neither here nor there. We'll take a look here at Amazon, which is the the premier retailer in the United States. And we had the big gap up, the two double ABCD patterns. It's and if you'll notice the highs between the April high and the July high and the one we just had on the 26th of October, those are exactly 84 and 128 days apart. Whether that's cyclically must mean something, especially when you have the double ABCD patterns measuring up in that area. And we've not taken out that high of Friday as of yet. We could today, of course, and if it does that, that will nullify this pattern. We had the same thing, happening with the price of McDonald's. It was also doing one that was doing the reverse point wave with these, and the gaps are the key here, folks, because if you look at these charts, you're not going to find any gaps because gaps are filled. Gaps are emotional things that take you up to levels that scare the bejeebies out of you, but that's what they're there for. But these are just ones that look very, very interesting, and we looked at a whole bunch of them. I don't want to review them one at a time because we're going to have Rich on pretty soon, and to talk about the grain markets a little bit, and El Nino, because we do have an El Nino situation possibly coming here very, very shortly. Oh, I did want to bring up the breadth of the market yesterday because if you'll bear with me here one second. I've got to enlarge it. Give me 1 second here to get it enlarged. And if you missed any part of the show, remember I did look at the open interest, and there was an increase in open interest in the stock indices yesterday, so that is not negative. If there would have been a decrease in open interest yesterday in the stock indices, I would be issuing a full-blown short, just on the fact of where we are with the New York Stock Exchange Index and the fact that open interest is dropping. But it did not drop, so I'm not doing that. So, but the breadth has continued to hold, at pretty good levels, but it has not accelerated up into this, especially with the action yesterday. Okay, we're going to have Rich Anderson of Anderson Capital Management on the break, and 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
Yeah, good morning, Larry.
How are you, buddy?
Doing good. I initially missed the call because I was putting some orders in. I wasn't looking at my laptop.
I figured you were. Listen, thanks again for coming to Las Vegas to see Sarah and I, and also meeting Tom O'Brien and his son Tommy. So it was great seeing you again. Folks, I have to tell you this story. In 1988, Rich would come out. He came out a lot, but because Mark Douglas is a good friend, was a good friend of Rich too. But we would. 1988 was very special because we were driving from Los Angeles Airport up to San Luis Obispo, or to Pismo Beach, and we went past Kachuma Lake, which is the big lake above Santa Barbara, where Michael Jackson's Neverland is on the other side of that. And the lake was almost empty. And Rich made the comment. He said, next year, he said, this lake will be filled. And I laughed and I said, get out of here. And he said, no, he said, there's going to be a big El Nino and this lake will be filled. And next year, that lake filled up. Rich, right now, that that lake is as dry as a bone. I mean, it has very little. You can't even use boats in it anymore, Rich. And that thing is like 22 miles long. You know, it's just terrible. So we do have El Nino coming, I guess, right?
Well, no, we've had El Nino. I mean, there's been a giant blob on the Pacific Ocean of warm temperatures. That's why, as an example, down in San Diego, they've had the yellow-bellied black snakes that have come ashore, and they're snakes that normally are way out in the ocean and very deep, and they don't know what's caused it. It was like 30 years ago that they had that phenomena again. So there's some unusual phenomena in the weather. The one thing I think you can say for sure is that we're going to have extremes, and these extremes will be bigger than they have been in the past. I mean, look at that hurricane that we saw down in Mexico. That was measured at, I think, the highest or the second highest ever, recorded at something like 200 millibars. So
wow.
There's extremes. I'm anticipating that we'll have one of those extremes. They'll have a major impact on a lot of the agricultural commodities come next summer.
Well, I posted a chart into Tiger TV of November soybeans, because the last time you were on, the beans were up around 910, I believe, and you said there was really strong support at 882, and now we've come down and we have made that Gartley pattern at 882 in the November beans. I believe that's where they were trading the last time I checked. And do you still think they're going to hold this support? And what do you see in beans for the near future here? Because, you know, we're finishing the harvest now. This should be all done, right?
Right.
Almost done. Yeah.
Well, just like in so many other markets, you've got cross currents. We had an election down in Argentina a week ago where there was no clear-cut winner, so there'll be a runoff election on November 22nd. And the only reason I mention that is because they grow a lot of soybeans down there, and the official exchange rate is, let's say, 9 pesos, but the black market's like 15, so no farmer is going to willingly part with their soybeans knowing that they're only going to get 9 pesos, and immediately, if they need to buy something, they got to pay 15 pesos for it. You know, they're not going to take that kind of a haircut. So it's widely anticipated that once the election is over in November 22nd, and now there'll only be 2 people, so one of them will get the majority, that they'll have a devaluation of their currency, which will allow the Argentine farmers to be more willing sellers. I was a little disappointed yesterday with one of the legs of the soybean complex, the soybean meal, having new low closes for I think since last summer. And the meal is a bigger part of the contract than the soybean oil. You get your best bull markets out of a meal dynamics. And part of that meal dynamics goes to another country, China, where the DDGs, dried distiller grains, apparently they're not importing right now, and you saw that in the weakness in the corn yesterday and in the meal. And of course, if we don't export the DDG to China, then we'll have to feed them here in this country, and that'll put pressure on our soybean meal prices and on our corn prices. So those, you know, are international things that are affecting these prices. I think you just got to trade them technically. I mean, look at silver yesterday. I mean, it was flying high. And then the Fed, in their statement, changes 1 or 2 words, and then all of a sudden, whack, it gets sold off sharply, and the euro got hammered, which Draghi, by the way, won't mind, because he needs a weaker euro to help stimulate the economy in Europe.
No, he's certainly not going to help that. In fact, that's the easy trade, is to sell the euro in any rally. Every time it rallies 70 to 100 pips, you know, it immediately goes down and makes new lows over the last 5 or 6 days anyway, for sure.
Right, and I think I don't know. I was a bit surprised by the energy rallies yesterday. I think that has something to do, again, with the international cooperation that seems to be developing over Syria, with the Saudis now engaged in the conversation with the Russians, and you know, there's going to be a 3-way pull. My feeling is that energy prices are somewhat capped because nobody's going to want to lose market share. Saudis aren't going to want to lose it. The Iranians, who are new, you know, coming back into the market and want to gain it, and the Russians, they can't afford to lose it either. So it's going to be an interesting, and that's why we're going to have these wide swings, and that's why you got to look at the technicals, because by the time you hear about the fundamentals, you know, it's history, and nothing. As one guy said, nothing ages so quickly as yesterday's vision of the future.
Who said that? I like that quote. That's a beauty.
An old farmer from Montana.
I could believe that.
Nothing
That's
ages
true.
so quickly as yesterday's vision of the future.
Yeah, that sounds like something Orson Welles would have thought about. Rich, when we look at the complex for corn, I mean, that's the largest crop that we have. And of course, we had a monster crop this year. What's your feeling long term on corn? Are we going to be involved with a lot of this international stuff again, or what's the overall picture look like technically to you?
Well, technically, it's just in a trading range, and there, we're going to be buying. We're going to need to buy acres. Yeah, at these prices, it's not going to motivate farmers to plant corn for next year. So the new crop, D16 corn, is 404, and we're going to need to keep that in that 404 to 430 range to make sure that the farmers are willing to plant X number of acres for next year. And then after that, if the crop gets going good, which I anticipate, they'll put pressure on it, and we'll probably trade down to this year's lows. But then come the important growing month, which is July, and for precip, because it needs about a half to 3/4 of an inch of rain per day, or moisture in the ground, that's when we could really see some fireworks. And so I think it's just a trading range for now, 440 to 360. It's 404 on the D16. The nearby is 378. It's closer to that 360 level.
Rich, one of our listeners has asked, how can crude oil rally, 10% with all the supply that they talk about, on the financial networks? And my answer to that is that what they're hearing and what they're seeing might be two different things, because the market responds, very, like you just mentioned, very, very actively to certain events that might affect supply demand down the road. Have you seen any changes in supply demand in oil that might have caused this 10% move? I certainly haven't, but the move it seemed to be expected, but I don't know what you're feeling on the on oil longer term.
Longer term, I think the world has changed, and the U.S. is a swing producer of oil. Because we have all this fracking. It's a structural technological innovation. That's what's caused natural gas prices to come down from where they were $13 per billion cubic feet down to actually they traded close to $2 on the nearby this week, and it stayed down for longer. That same thing's happened to crude oil because of the fracking. And it's so easy for these guys to cap these wells, and then when the price goes up, it'll take them 30 to 45 days, and they'll uncap the wells, and then we'll be producing more. And so I think there's a real overhead supply, and we're going to swing back and forth like crazy. Obviously, yesterday's rally, which was a bit surprising, that's why you have to be a technical trader, because the fundamentals are true within maybe a $20 range, maybe between 40 and 60. But within that 40 and 60, there's these $3 and $4 swings with margins in futures are huge. We have tremendous leverage here. That's why if you're going to do one thing, you'd be over margined, have 4 or 5 times whatever the exchange wants you to have.
One other question that we've been asked is, what are some? Oh, 1 second. What are some of your, you have some pretty heavy hitters that are pretty famous. What are they looking at when they're talking to you about the stock market? Do you hear any opinions that you care to share with us?
The number one rule: don't fight the Fed.
Yeah.
And as an example, it's 25% of the S&P. I heard this statistic yesterday in Bloomberg. 25% of the S&P 500 stocks have reduced their share by 4% or greater. And of course, when you have 100 shares and your earnings are, let's say, $10, it's 10%, and now you take down 40% of so you only have 96 shares and you have a $10 earning. That's increased your earning ratio.
That's the buybacks.
That's financial engineering. That's all. We're coming to the end of that with this low interest rates, and it's going to have to unwind somehow, and so nobody's really figured out what that is going to be. But I mean, the Fed's kind of signaling we got to get started, and what they're probably going to do is they'll make their first minor raise, but they'll indicate that they're not going to raise very much or very fast in the future, and that'll make everybody more comfortable. If you look at the market yesterday when they made that announcement, the market initially sold off, and then we rallied, made new highs. Mm-hmm. But and they're of course saying they're data dependent, so you never know. But the financial engineering's taken us a long way, but I have questions about how much further it can take us, and it's really a stock picker's market. If you look at the number of stocks, and I'm not even a stock trader, but if you look at the number of stocks, sounds like I am, but I'm not, that have had more than a 20% correction from their highs, which is a bear market in the stock world. I think that you'd be shocked at the percentage of the S&P 500 stocks that are ever gone down more than 20% from their highs this year. It's
only those 500. It's only those 531 stocks in the S&P, the Nasdaq, and the Dow Jones that are making this thing run. But those are the ones that are people watching. The New York Stock Exchange Index is, still in a downtrend. But like you say, you just can't fight the Fed. So, we'll see what happens with it, longer term. Listen, Rich, we want to thank you for coming on, buddy, and we'll have you on. Oh, one other question. We've had a question about the cattle.
Sure.
We got all the way down to 122 in the cattle, and then we snapped back quite a bit. How do you view them now, the December cattle?
Well, I had originally thought that they were a 155 to 135 item. Mm-hmm. And then the boat got too far loaded on the long side, and they had to flush and rinse. And the beautiful thing about futures is there's market clearing, and it washes things out quickly. And that washout took them lower than they probably should have gone, but there were just too many people in the boat on the wrong side. I still think we're a 155 to 135 kind of trading range. Bad weather in the feeding belt would affect the gains of cattle and make things go a little bit higher than that. But there's just a ton of meat around. The World Health Organization said that cured meats they put them in the category with cigarettes. Remember when they used to trade pork bellies, how they'd say the bacon was carcinogenic? And, people don't eat any less bacon now than they did then. In fact, it's probably more because McDonald's and all the restaurants had to cook their hamburgers to a higher temperature, and then there's no moisture in it, and so they figured out the only way people are going to eat the hamburgers then is if they had a little bacon to get some of the consumer's appetite for red meat might be dimmed a little bit, but not a lot. Where the concern would be in the future, going over the next 5 years, the Asians are very food safety conscious, and it might impact our exports, and that's what I'm concerned about. The market that looks most interesting to me right now are these hogs. You've gone to China many times, and the numbers are hard to put your arms around, but the price of hogs in China is so much higher than the price of hogs here. They've made sure that the plants in the United States are paline free. That's one of the demands the Chinese government has had in order to bring exports in from the U.S. And if and when they start, and I believe they will, because I believe there's been a fairly large liquidation of hogs in China, and with that liquidation, they're going to have to replace some of that meat someplace, and I think they'll bring it from here because it's so much cheaper than over there. Could have a dramatic effect on the price of pork and the price of hogs. Keep in mind, it's only a 1 or 2% change in demand that changes price a bunch.
Yeah, listen, we got to take a break, buddy. Thanks for being on, Rich. I certainly appreciate it. Bye-bye.
Take care. Thanks. Bye.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've had Rich back on the line here. Rich, someone's had a question about El Nino affecting the coffee crop. Do you have any comments about that? I haven't traded coffee in 40 years. I don't plan to start now.
The El Nino, this has been a huge El Nino. And right now, it's impacting things like the coffee crop in Brazil. And I don't particularly trade coffee myself, but it's at a value level where it's likely to hold.
Okay. Now, this was a caller. Jay, are you there from Boston? Evidently, we lost him. But anyway, he had a question about coffee in El Nino. I've always made the joke to Rich is when my grandmother used to tell me, feed me my oatmeal early in the morning. She says, now, when you want to have the urge to trade coffee, go over in your playpen until the urge goes away. So I haven't traded coffee for 40 years. So, and I don't need it anymore with all the stuff we have now. But thanks again for coming back with us, Rich. I appreciate it.
No worries. I'm here. Anytime.
All right. See you later, buddy. Tell
Thanks.
Lisa
Bye.
I said hello.
You bet. Thanks.
You bet. Bye-bye. Okay, folks, so we're going to wrap it up here. We've got just a few minutes to go. Keep an eye on, where we close today, because if we close in a new high ground, everything that, almost everything I've already talked about, more than 30% of it has already been violated, with the Dow Jones going 100 points higher than the 786 and the S&P exceeding the 786. The New York Stock Exchange Index is still holding, but that's the only one. And by very, very thin fingernails, by the way. So we'll see. Yesterday was a big Bradley date, the 28th, so it only has a one-day orb. So today or tomorrow, if the market makes new highs, then this is totally wrong, and you cannot stay bearish. I don't know how much farther it'll go, but you just can't be bearish. The longer term says it's still bearish. Stuff that I look at of all the stocks, it still looks bearish, but the rest of the world is seeing it different than I am. And if you are seeing things different than everybody else, you're probably looking at it the wrong way. I think Henry David Thoreau said something like that, but I don't remember what the exact quote was. So keep an eye on the Treasury notes. We're right at the moment of truth right now, 127.25. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.